Hello, my name is Dan Bossy, President of Ag Resource Company here in Chicago. I'm joined by our livestock analyst, Nate Losey, and we're here to talk a little bit about the long-term aspects of the meat markets. In the last few years, we've all understood that the commodity cycle has imploded. The grain farmer has had profitability really from the beginning of the biofuel build-out, starting in about 2007 up till 2013. Then his fortune started to shift. In the livestock markets, they really started to come on in 2011. The price of cattle doubled, then we had PED and hogs, and then lately now we've started to see the livestock markets rolling over. Nate, I guess the question to you is, as we think about the grain markets and think about the livestock markets, has this mega cycle in agriculture, which has now turned lower in grains, really had the same impact in livestock?
I think starting in cattle, not necessarily. The cattle feeding industry has seen very few years of profitability in the last several years. It's really the cow-calf industry that has made a tremendous amount of money. I think in the last 17 to 18 years, there's only been one or two losing years. Starting in 2014, cow-calf producers saw profitability increase 4 and 5 times over previous records. And so as we look at the cattle and beef markets, we're finally seeing expansion in the cow herd, and the market is really struggling with how to deal with increasing beef production and beef supplies. Looking forward to the fourth quarter of this year, we see a slight increase in beef supplies, but it's still going to be very low. It's really first and second quarter we're seeing 3 and 4% increases, which is something we haven't seen since the late 90s. And so the market is struggling with a bearish outlook for early 2016, but we still have a fairly supportive outlook for the fourth quarter this year. Looking at pork producers record profits last year through PED, herd expansion, and markets, hog prices have normalized this year back to historic ranges. Going forward, I don't know if we've seen margins that are going to cause producers to cut back in the upcoming quarters. I do think prices going forward the outlook is bearish for pork producers. We've been telling them to be prepared to sell on any rally.
It makes good sense. In fact, we can also include poultry in there, I guess. And today we have whole breast meat trading below the price of wings, which is something that doesn't happen very often, and breast meat making it into the grind. So if we think about pork and poultry being first, how long do you think it'll take the cattle industry really to get into maybe a bigger supply trend where the market profitability shifts away from the cow-calf man to the feedlot?
The cattle cycle, obviously, because of production time, is several years versus poultry, which can change direction very quickly in a matter of months. Hogs can make those adjustments in 6 to 8 month time frames. I think going forward, we can count on increased beef supplies at least for the next 1 to 2 years, or at least until we see the cow-calf industry has decided to slow down.
Okay. Already we're starting to hear talk about a drop in calf prices. I noticed in the last week, dairy bull calf prices are off $50 to $75 an animal. I guess that would be systematic of this expansion of the dairy herd we're looking at, or expansion of the cow herd in general. But overall, I guess $400 a profit for a cow-calf man today. Do you think that holds at that level, or where will we be in several years?
I think we've probably seen the peak in margins, and cow-calf profitability is going to decline. But as far as segregating the industry, historically it's always the cow-calf producer that takes the majority of the total amount of profits available to the industry.
Okay. Is there any risk in terms of the bull side, if we look forward down the road, that you can see that would change this, how should I say it, slow tipping over of the beef market and maybe a little faster tipping in terms of pork and poultry?
Of course, exports have become increasingly more important in the U.S. livestock markets in the last 15 years. If we were to see a change in the trends in the U.S. dollar and a big increase in demand, say from China, exports is definitely the one variable that can change things.
I think that's a very good point. Would bird flu, if it was introduced back in the poultry flock this fall further south, would that have, you think, much of an impact?
That's the other issue the livestock markets need to look forward to. If we in fact, as the seasonal migration takes place, if we do see bird flu hit the southern poultry flocks, that could really slow down poultry exports and further flood the U.S. market with exceptionally cheap poultry. So,
If you're a cattleman, a pork producer, a poultry producer, you talked about maybe a rally into the end of the year. What would your advice for them be longer term?
for the livestock producers, prices are down and pretty ugly today. Fourth quarter production, I would still hold off on getting those priced. Over the last 25 years, I think there's only been about 1 year that we haven't seen a 10% increase from the third quarter. So I'm still optimistic that we'll have better prices in the fourth quarter than what are offered today. Going forward, fourth quarter rally, I would want to price well into 2016 on any kind of rally at the end of the year.
Thank you, Nate. My name is Dan Bossi. Thank you for joining me for this discussion about the longer term aspects of livestock. I think Nate aptly suggested that we should be all looking for protecting margin as we think about 2016 and beyond.